Hi there. Thanks for joining today. This is a speaker preview for the Carbon Solutions Forum. My name is Will Bernholz, and today I'm speaking with Suhrid Mantravadi, a partner at Grey Rock Investment Partners. He focuses on the energy transition, investing, sourcing, and underwriting new transactions, and ultimately is deploying capital across low carbon and energy transition infrastructure. Suhrid, from a private equity perspective, where is capital concentrating today? Or are there any categories being quietly deprioritized today?
Sure. And first, thanks for having me. This is always fun to do. What I would say is maybe I'll start with the second, which is what's not happening, right? What's being
Mm,
deprioritized in your question? Hydrogen, I think, pretty heavily is being deprioritized. I think there's a lot of focus on it, but with the one big beautiful bill, there's just really not a lot of stuff happening in hydrogen. We're also seeing much less kind of in the broader EV ecosystem, be it manufacturing for batteries, be it EV manufacturing or charging system networks. We're just not seeing a tremendous amount of those. What are we seeing a lot of? Power, right? It feels like everyone right now is a data center investor by proxy. And so we're seeing a lot there. And within our own portfolio, for example, we have a business that started converting flared natural gas that was being wasted that was converting it into power that now does AI data center power. We have a geothermal power business that originally was going to be serving utilities and now targets hyperscalers because of their willingness to pay. So I think power is really due to kind of the demand for power from the hyperscalers is really coming through. I also think we're seeing a refocus on projects that work at a smaller scale. So, for example, we spend a lot of time in carbon capture and sequestration. A lot of the larger projects have struggled. If you're trying to build hundreds of miles of pipeline, that is just difficult to do. The projects that are a little bit smaller and can be done in a small geography and don't require a huge amount of stakeholders, those are getting done and those are getting done fast. And so I'd say, particularly with kind of permitting kind of accelerating under this administration, I think that's been a big delta.
When it comes to investment, how would you characterize the attitude towards low carbon right now? Obviously, the discussions around decarbonization and carbon intensity have evolved over the years. What are the attitudes right now?
I think there's a view that there's a lot less focus to some degree, at least from the government on it. But I think a lot of the corporates have not changed. And what that means now is you focus pretty heavily on cash flow. So, for example, we have a fairly substantial carbon sequestration business that previously maybe would have thought about, hey, do we go out and try to do larger projects that require a bit more governmental support? And now we're entirely focused only on doing things that are that have commercial offtake and are a size that doesn't require any sort of governmental support.
Yeah, that size is something you mentioned to me previously, that the size and scope of a project, that characteristic is really important right now and can shape the outcomes. So when you are considering opportunities, when something reaches your desk or your investment committee's
Yep.
desk, what characteristics are there that consistently separate deals from get those that get funded for deals that don't?
Sure. I think it's easier some ways. I'll often start on the second side. What doesn't get funded, I think, is what I call Rube Goldberg projects. So if you need a wide variety of things to go right for you to make money, we tend to disbelieve those. So, for example, if you're saying, "Hey, I'm going to go get Section 45Q tax credit, but also voluntary credit market support, as well as LCFS, low carbon fuel standards in California," and that's you need all of those things to get a true economic return. We just don't believe those things make sense. We also tend to focus on things that we think make relative energy sense. What do I mean by this? Oftentimes, a lot of hydrogen projects, you look at it and you say, man, the energy, the energy output to the energy input here just seems really skewed. So we'll tend not to do things like that. We look like, hey, small contracted projects where the scope of the project is not large enough and it's going to be a real concern to your fund or a real concern to the counterparty, right? There's not that concentration risk. Second, you want to make sure you have credible offtake. What I mean by this, you've got someone that has a balance sheet that's willing to buy your product or service and is willing to sign a long-term offtake for it. We tend to say there's enough things that work right now that we don't really need to take technology risk. And so we generally want things that, even if it's never been, all of it's been done before. We want to make sure all of it's been done before, even if it's not all been done together before. Um, and 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 I think the last thing we want to do is a pathway to make sure we know who the buyer is. We spent a bunch of time thinking about, man, if I build this project, we're a private equity fund. At some point, we must exit. Who is the logical buyer of this project or company? If we can't answer that, we really struggle to get along. And there's lots of things where you sort of say, this seems really interesting, but gosh, I don't know who's going to step in. And we sometimes struggle saying we're going to create an entirely new business and take it public. It's hard for us to do.
Thinking about what makes it easier or harder to do, I imagine the return on
Mhm.
investment is one of those important calculations. But that has been evolving. You mentioned
Yep.
tax credits and subsidies, and as the regulation and policies change, I think those return expectations change as well. So, how would you say that return expectations have evolved on transition assets, and where are investors drawing hard lines right now in terms of expectations and risk?
Sure. I think there's a couple dimensions here. I think we spend almost all of our time on project development, actually, building projects to deploy real assets and do something, a carbon sequestration well, a power plant, things like this. And there, people tend to focus a lot on true development risk and true development timelines. So for example, we love nuclear. We can't figure out how to invest in it because fundamentally, in a fund that is kind of 10 to 12 years in duration, you don't know if you'll get to the end of it because inevitably everything will be delayed. You have no idea what causes the delay, but it'll happen. And so I'd say a lot of what we focus on is hey, what are the risks I'm taking on? And really the hard line that I think a lot of investors are taking on is will this happen in a reasonable time period, including delays? And if the answer is no, and oftentimes you start worrying about things like administration changes. The answer is no. You kind of say this is probably not worth the headache right now, or perhaps a strategic should do this.
Something that is, all over my timeline and all over the news is
Yeah.
data center load growth. Let's talk about that for a minute and how data center load growth is reshaping the demand for power, firm power,
Yep.
and necessary infrastructure. Where do you see the most investable opportunities across that sector? Is it pipes, wires, enabling assets, all of the above?
To some degree, all the above, but I think primarily generation assets, and across a couple of different dimensions. In the near term, like I think they're going to take whatever power they can get, and so it's going to be natural gas. But our perception is things will pivot to. I mean, almost all these hyperscalers have some sort of net zero goal or sustainability agenda. I think it's going to end up looking like zero carbon power, which to us, within our investable universe, looks like carbon capture and sequestration and geothermal. And so we're spending a lot of our time because it feels like there's a lot of assets to deploy in things we understand, which tends to look like surface risk, right? Like a lot of us are former oil field guys. I'm a petroleum engineer by trade. I've never used it. I went right into the renewable side. But we're much more comfortable with the subsurface, I think, than a lot of other private equity investors. And so that's what we're focused on is, hey, if we can get geothermal to work and suddenly have unlocked, make your number up, 200 gigawatts in the US West, and it's all zero carbon and 24 by 7 baseload, I think that's really interesting. And I think that enables a lot of data center development very quickly, actually.
And geothermal is very, very exciting. And I know very popular in the investor community. Speaking of that investor community, let's ask something controversial, perhaps.
Sure. Yeah.
What are the sharpest disagreements? Where is there not alignment, either within your firm or between firms?
I think everywhere is, the first thing is given the exposure all of us as a country, but really as an industry is taking to data centers, how how much of this is real, right? How much is going to get built? How much is actually going to get contracted? I think there's a lot of concern there. We tend to focus on doing things that are heavily contracted. So in some ways, we probably see less alpha because we didn't go build speculatively, but it allows us to have kind of some certainty. So I think a lot of it's going to be data center load forecast. I think the second is going to be um, how quickly are sort of projects going to get built. I think there's things are moving. I'd say we've found permits to be moving faster now, or at least in carbon sequestration land. And so the question becomes, what all can we expect for permits going forward across a variety of different. So I think there's a lot of different views and takes there.
So, assuming we get everything we want done, and assuming there is just a lot of opportunity and even some stability, are there assets that you worry are at risk of being overbuilt, or are there areas where we're perhaps underestimating the future value? So is there going to be overbuilding, underbuilding?
Yeah,
Where are you making your bet?
sure. On the overbuild side, I think you have to be real careful. Again, on the data center power side, I have no idea. It may be that we need a lot of power, but I wonder if we're building it in the places where those data centers are going to be and where the wires are to take them. So I think there's a lot of concern there. I think green fuels. I think we've built a lot of things like renewable diesel plants, and I wonder what the demand is, particularly if SAF standards, for example, start sustainable aviation fuel standards start easing up in places like Europe. The underbuilt side, we're spending a tremendous amount of time on potable water. It just feels like there's such a shortage of drinking water. And you need it for everything. You need it to cool your data center. You need it for your lawn. You need it to live. And so a lot of what we're spending our time on is, man, like it feels is the what I would call the to some degree the less interesting industries, if someone perceive it, right? Like it's not a super cool AI data center. It's literally a potable water pipeline. So that water processing, things like that, we think are going to be underbuilt because it just doesn't feel like there's a lot of people thinking about it. But you're going to need it, right? If if cities like Dallas and San Antonio are going to double, where's the water going to come from? So I think it's a really basic stuff that maybe you're not reading in the Wall Street Journal every day that I think will get pretty underbuilt.
I love that. And just to give a plug for one of our other conferences, the Permian Energy Dialogues
Yeah,
in Austin, water is one of our top topics there. And
yeah, and
so
I think wastewater for oil and gas. I don't know, right? As we sit here trying to figure out how we're going to dispose, particularly given seismic issues, I think that's going to be really underbuilt. How are we going to? We need the oil. We certainly need the gas. How are we going to? You know, how are we going to get it without producing the water and getting rid of it? I think that's a huge problem that we're not solving. We need to.
all good questions and will be a core part of the dialogue at the Carbon Solutions Forum and as well at the Permian Energy Dialogues later this year. Surid, thank you for sitting down and joining us. This has been a really great conversation, and I look forward to seeing you in San Diego in February.
Thank you so much. Love that. Love having it. So I'm sure I'll see you soon. Thank you. See you in San Diego.